What's good, traders? Welcome to the bootcamp. Today we're on day number 23. If you guys are new to the bootcamp, make sure you like and subscribe. And guys, just to let you know, I did this video, I literally recorded it and I didn't even click the record button. So I'm going to be doing this whole thing again, and it is frustrating, but it is what it is. But let's just get right into it. Today we're going to be talking about entry strategies. Now, just before we get into the strategy and the entry strategy that I use, I want you guys to understand that this has taken me 5 years to tweak. I've made all the mistakes, and this is the best that I can make the strategy, and it's a textbook simple strategy. Okay, and before I actually deep dive into the entry strategy, I want you guys to realize, and I want you guys to kind of understand that follow one strategy, follow it to the T, and keep practicing. Okay, so for example, with this strategy that I'm using, I knew this strategy when I first started off with trading, and then the mistake that I made was I ran away from the strategy because I saw other people making better strategies or saying that it's better. And then in reality, I should have used this textbook strategy because it just made my journey way too long. And so because of that, I went back to the strategy, I fine-tuned it, tweaked it, made it the best that I can make it. And now we're here today and we're using the strategy. And this is a strategy that made me profitable. Okay. This is what's made me my money, and it's made my, Discord server money. And guys, we've had, like, I think the win rate for this month was around 80%. Last month was around 60%. And I think the month before that was around 50%. So it's a profitable strategy. And using this entry strategy with the risk management strategy that we use, with if you put everything into one, becomes a killer strategy. But today we're going to be talking about entry strategies. And the first one we're going to talk about is double top and double bottom. So we're going to spread this between 2 days, only because I really want you guys to build that confidence, to enter the market with confidence. And I also want to take it nice and slow and really explain the strategy to the T. Because if I rush through this, what's going to happen is you're going to make the similar mistakes that I made. And then you're just never going to learn the way I want you to learn, right? I want you to learn from my mistakes rather than you learn from your own mistakes. Of course, you are going to make a lot of mistakes in the market, totally fine, but I rather you listen to me and listen to the mistakes I made so that you don't just fall for those traps. I'd rather you make new mistakes and, learn from that rather than you learning from the mistakes I made. So technically, even though you're just starting from scratch, if you are, or even if you've had 2 years experience, we can add on the 5 years experience that I've made, and it will make you a better trader with the jump start that I'm giving you. So when it comes to the entry strategy, today we're going to be looking at just double tops and double bottoms. And we have this 3-step protocol. Okay. We first find the trend. Okay. This could be an uptrend or downtrend. There's only 2 ways the market moves. A lot of you will also add on consolidation, but in reality, there's only 2 directions the market moves. It either goes up or goes down. So the first thing we have to do is find the trend. I'll be going up, I'll be going down. Okay. Next is wait for the entry model. Okay. And I'm going to show you the entry model for the double top and for the double bottom. And then after that, once you've found your entry model, you wait for a candlestick pattern. Okay. Using these 3 steps instantly gives you A plus setup. If you miss out, for example, you missed out the trend part, that A plus setup drops down to B or C. So this is a very, very important 3 steps. Without these 3 steps, you're forcing entries. Without these 3 steps, you will get stopped out. Why? Because these 3 steps is the reason why this entry strategy or this entry protocol will work. Okay, without these 3 steps, or without these legs, let's say, it won't be able to hold, the weight of the strategy. Okay. And the reason why I'm saying this, guys, is because when I show you and we'll go through setups, you'll see that the market can fake you out. The market can make you feel greedy and you'll enter way too early. Patience gets tested when it comes to entries. And so if you don't follow these 3 protocols, you are just going to lose in the market, right? Because I know a lot of people, and including me, when I first started off, I would definitely look at the trend, right? Okay, cool, we tick that. Then I would look at the entry model. Yes, I'll tick that. But then what I would miss out is this last step, which is waiting for a candlestick pattern. Because I always used to miss this out, I used to either have false entries or early entries in the market. So making sure that you don't have that false entry, making sure that you don't enter early, just please follow these 3 steps, okay? So let's actually have a look at the double top and double bottom. Now, you probably remember this from the first few days of our boot camp, but I'm just going to remind you. So the double top is when price comes to a price and then comes down and then goes right back to that same price, rejects this same price and continues to come down. And then our entry model is when we wait for the retest of something called the neckline, which is this area right here would be the neckline. We wait for price to retest this neckline. We enter at this neckline and we continue following this trend. Okay. So double top, right, is when price comes to an area twice, right? Price comes to this area twice. In if we had to explain why it came to it twice, well, price came to this area, we saw rejection. Price tested the area again, we saw the same rejection, meaning that sellers are in control. Okay, but we're not going to enter here because that's way too early. What we're going to do is we're going to wait for internal structure to be broken, which is this neckline. Price to test, so the break, retest of this neckline, and then that's where you enter, and you enter for the short right here after you have seen your candlestick pattern. Then you keep your stop loss above market structure, and then you keep your take profit wherever the next key level is. Okay, so the way we go about this, and I'm just going to write some notes: wait for price to get to tap twice. Okay, wait for price to tap twice, and I'm actually just going to make this like a list. Okay, next, wait for internal structure, i.e. the neckline, to be broken. Okay, and so once that occurs, wait for your candlestick, or actually no, before you wait for your candlestick pattern, you will wait for a pull back to the neckline, and then you wait for your candlestick pattern, i.e. example, e.g. morning star, let's just say, for example. Okay, then you enter. Okay, and if you look, right, if you have a look, when it comes to this, you'll see that most of it is wait, 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 wait. We are waiting. We're always waiting. We're not going to force an entry. We're not going to enter because the market has given us this double top. No, we are waiting for price to tap twice, waiting for internal structure, i.e. the neckline, to be broken. Then we wait for the pullback. Then we wait for the candlestick pattern to show, i.e. the morning star, and then we enter. Okay, now you're probably wondering, oh, if you're confident with the strategy, why don't we just enter at the top, right? Well, I've made this mistakes many times and it works, right? But those are just lucky trades. The only signal that would 100% work, or not 100%, but works majority of the time, is when you wait for price to pull back at that neckline. Because this is a false entry. This is way too early, and this could just be, price could easily come down, create a new high, and then continue to go up, and then it's like you're screwed, right? Then you're like, oh, I've just been stopped out. So being patient, waiting for this internal structure, because that validates that, okay, we are going down, that pullback, entry at the candlestick pattern, because if you don't wait for the candlestick pattern, you just wait for a pullback, price could easily just continue to go up, and then you're just losing again. So you wait for that candlestick pattern, and then you enter for the sell. Okay, and then obviously you wait for the next key level, and then you just target that stop loss above the highs, previous highs, and then you're good. Okay, and so that's pretty much when it comes to double top, and double bottoms is pretty much the same thing, right? So double bottom is like this: price comes, taps back at the same price, okay, and then breaks the neckline, then it retests the same neckline, and then we go for an entry right at this point. Okay, this is our entry signal. We wait for the candlestick, and then again we have to make sure though that price tapped both times at the same area or the same zone of the bottom. Okay, sometimes it might be a little bit higher, sometimes it might be a little bit lower. It doesn't matter as long as it's within the same zone or the support zone, right? So for example, like here would be the resistance, here would be the support. As long as it's in the same support resistance zone, you are good. Okay, and then the neckline can also be a little zone. It won't be exactly at where the neckline reversed or pivoted. It will be around that area. So making sure you also understand that it's not just going to be specifically at the same price, it will be within that area. So make sure that you don't make the mistake where you're being too patient and then you lose your signal, because then you're going to be entering way too late and then you're going to have your stop loss way too wide. Okay. Now, key tips when it comes to this pattern is, I would say, make sure you always wait. When it comes to candlestick patterns, the best one is an engulfing candlestick. Always enter with an engulfing candlestick. It just makes the trade like you're going within the momentum of the trade rather than entering on, let's say, an inverted hammer or a something that's like a Marubozu or anything that's not an engulfing. The only reason why is because in engulfing, you got the momentum and it just drives the trade to your take profit and gives you that sniper entry that you want, right? If you enter too early or you don't look at candlesticks and you just enter because of the entry model that you have, you're going to realize that price will maybe go towards your stop loss and then continue, or you will see price move around your entry point way too much, right? So if you guys just take your time with it and wait for that candlestick pattern, you'll realize that you actually see so much potential with the trade and you actually go within the momentum of the trade. This is something that I've learned through the years of my trading and is really, really important when it comes to entries that you enter with. And I'm actually going to write this in capital letters: always enter after an engulfing candlestick. Okay, always enter with an engulfing candlestick. Why? Because it's the momentum that the candlestick gives you, which is amazing. Okay, and I'm actually going to keep this bold so you can see. Okay, so that is pretty much your entry strategy to the T. Okay, and it is very important that you have this system put in place when it comes, and I'm just going to make it as clear as possible so that you guys can see. I want you guys to make sure it is as clear as possible to you guys, and so that you don't make mistakes, you don't rush the process. Because if you, let's say for example, when it comes to entries, sometimes I might just write this down. Okay, first find the trend. What's the trend? Okay, it's bullish. Okay, one uptrend or downtrend. Then we wait for the entry model. Okay, this is the entry model. Okay, and then we wait for the candlestick pattern. Okay, and so I've made a sheet for the candlestick pattern. If you guys want a sheet or like a poster for the entry models, I can also make that for you guys. So just let me know in the comments down below, join the Discord server, and then I'll place it all in the Discord server for you. If you guys want the poster for the candlestick patterns, click the link down in the description below. I have given it all for free in the Discord server, and all the students use it. They love it. It's amazing. You can stick it on your wall. You can, put it on your screen, and you can always have it right in front of you, so that instead of always searching up the candlestick pattern, you actually get to see it in front of your face, and that helps you memorize and train your eyes to see those patterns. So it helped me a lot when I was trading, having those posters or having them notes in front of you. I'm grateful that I have, two screens. I can have one screen where it shows me, the candlestick patterns or the entry models. Because I only have two entry models, it's kind of something where I don't actually have to see it, but it's good if you're a beginner to just have it right in front of you, train your eyes, keep watching, keep looking, and actually practice with this as well. So guys, if you want, take a screenshot of this, and I'll make it big screen for you guys. Take a screenshot of this so that you guys can use it. And tomorrow we are going to be looking at head and shoulders, but what we're going to do now is we're going to look into the market and we're going to find these models. I'm going to show you where you'd enter, where you keep a stop loss, where you keep a target, and then I'm going to also show you the mistakes that you can make when it comes to looking for these patterns. Okay, so we're going to do a little bit of back testing now to see this strategy and see how it works. And if you guys just take a screenshot or take notes, make sure you are taking notes for this, because this is very, very important. It is very simple. That's why it looks really neat. And, head and shoulders even more simpler than this. and it makes killing results, right? You make a lot of money from this and you get really good risk to reward ratios as well. It's not like a terrible risk to reward ratio trade. It's always the best. I would say it's always hitting above 1 to 3, but we'll have a look, right? We'll have a look. So I'm going to remove this now so we can have a look at the chart. Make sure you guys pause the video, take a screenshot, and then we'll continue. Okay. So let's have a look at the chart. Okay. Now, let me just delete these. Okay, let's have a look at the chart. Okay, and instantly we can see right around over here, we kind of see it where price is creating a double top, right? You can a little bit see this, right? Where it's creating a double top right here. Can you guys see that? Like a double top where price has touched this area. Now, key tip, when you're looking for double tops, look around key psychological or round psychological numbers. So for example, here, this is around 1.12, right? And I'm actually going to just draw that line so you guys can see 1.12, like that, right? So we had a double top, right? Double top around this zone, okay? And so let me make it as clear as possible for you guys. Let me show you that. This is where price tapped into once and twice. Okay, it's tapped once and twice. Okay, so that's already the formation that we saw. Now remember, we don't just enter once it's tapped once or twice. We wait for a break of neckline. Okay, so I'm waiting now for price to break this neckline here. This is the neckline. Okay, and what I'm going to do is neckline is actually at another psychological level, which I'm going to show you guys. Another psychological level, which is 1.10. 1.10, another psychological level. And what I'm going to do is I'm actually going to draw an area to where this zone is, okay? And so we can clearly see price has created the double top. We wait for this candlestick to break down. We clearly see that it broke the neckline. It's broken. I don't even have to have the zone. It's broken this neckline. So what we need to have a look is within this area, okay? And so what I'm going to do is I'm going to scale in, okay? This is on the daily time frame, but we can scale in, okay? And you can actually see, and I can even scale into the 1 hour where we look for entries, right? You can see that we had this break of neckline. Now, don't fall, right? The neckline is here. Do not fall for this price, right? Do not fall for this because this is not a break. The break is this full-on bearish candlestick. Now, this bearish candlestick itself will give you FOMO because you're thinking, damn, this is a big bearish candlestick. We are going down. We are crashing, right? But this is just to build FOMO because remember, our strategy shows that we need to have price retest the neckline, okay? So if I drew a zone at the neckline, which if I just use this, right, a zone at the neckline. Now, like I said, it will not close to the T, right? But as you can see, we do have price come right down to the neckline, right? Right down to the neckline. Can you guys see that? Right here, okay? And then what we do is we wait for price to give us our entry signal, which is now next the candlestick pattern. So what you do is you can go to the poster, have a look at the candlestick pattern. You can actually see that this 3 candlesticks are, and I'll just scale in, this is a evening star, right? An evening star at our neckline, okay? So what we would do is we would enter for a sell after the evening star right there, okay? We'd enter right here and then stop loss. Well, in this case, we don't actually have to keep it all the way up here because that's way too wide. What we can do is we can keep it just above this neckline, right? Just above the neckline, because if it does want to come back up, we can. If you want to be reserved, you can keep it above the previous high. Doesn't really matter. We're still going to get really, really good results from here. Now, where are we targeting? Well, we're going to target the next level, right? The next key level, which is 1.09, right? 1.09, okay? And so we enter, we target 1.09, but this is giving us a 1 to 2 risk to ratio, almost a 1 to 2 risk to ratio, right? If we keep their stop loss just above here, is a nice 1 to 3. But let's say we're just being reserved because of the strategy that I showed you. I want to make sure that we are going to the T. And you can see that take targets get hit, right? Target gets hit all the way over here. Okay. And so we could continue based on market structure. We could continue. We can have TP1 here, TP2 at 1.08, right? Which is now giving us a killing result, right? This is TP1, TP2, which is giving us a nice 1 to 4 risk to ratio. And you can see that it also gets hit, right? And that's why it's so powerful, because we barely got into drawdown. We barely got into drawdown, and also we had a really good sniper entry. So even when you go on the 4-hour time frame, just based on momentum, you can actually see that we have had price go straight into that target zone, right? Key levels, right? And so it's up to you. You can have tape it over 1, tape over 2, it's up to you. But we had a really nice signal right here. Okay, and that's how you trade the double top. Now, I found the double top on the daily, right? Now, the higher the time frame, the stronger the move is going to be. Like, for example, this is around 186 pips. Now, Euro USD doesn't move that fast, so this will probably take around a few days. It's taken us 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's taken us around 9 days. The first move took around a week, the second move another week, right? But on a different time frame, it would be much faster. Now, I don't look at double tops, double bottoms on the daily. I'll look at more like the 4 hours or even the 1 hour, but the 4-hour time frame is like the sweet spot, right? That's where you get to see. And actually, if we have a look, you'll still see that we did have a double top, even when it came to this, like for example, even this trade, right? We did have a double top here. So even if we look on the 4-hour, there's way more moves that you can make, right? So for example, we had 1, 2. Let me just draw it out for you, right? 1, 2, right? Price came twice. It's not always going to look pretty, right? It's not always going to look good. Then we have a neckline where price has to break, right? Price breaks this neckline. Now, this neckline has an area of interest, right? Now, it doesn't come right into this neckline. So for this example, it wouldn't be the best example because I don't actually see an entry signal. Even if I scaled in to the 1 hour, I doubt we would have seen an entry signal here because it's not actually at our it's not actually at our area of interest. Actually, we do kind of. We see doji, and then a full-on bearish engulfing. Like I said, always enter after a bearish engulfing or an engulfing candlestick. This is an engulfing candlestick. Really, really strong bearish engulfing. So yeah, we technically did have a price retest this area, and you can see that the neckline definitely got retested. Actually, no, we had a bearish engulfing right here. We had this break retest. This is actually where the retest was, right? So I'm looking a bit too delayed. This is where the retest was. We're looking at the 1 hour, and then we enter right after the bearish engulfing. Stop loss just above this area, or you can keep it above here. You don't have to. I like to keep my stop loss just a few pips above here, because even if it was a false entry and it did go a little bit up, I can just re-enter. And then targeting obviously the next low, which is around here. Now this low would have an area, and then you can see price was playing with our emotions. Ooh, price almost got to take profit, plays with our motion, comes all the way back up, but then eventually hits our target. Okay, and so this is this is also a long trade, but look, 1 to 5 risk to reward ratio. So it's like this setup is really, really clean. It's really, really nice. Yes, it didn't actually straight away hit our top take profit. We did have price really testing our psychology, and I think we would have ended up hitting break even at this trade anyways. But if you held the trade, you would have hit profit anyways, right? And so with this setup, guys, like you're gonna see yourself making a lot of money on the setup. But not only that, guys, like I want you guys to practice. I want you guys to actually do what I did. Just go through the 4 hours, go through, look for double tops. We can actually try find this right here, double top, kind of. It's not the best, but we got two. Price came twice at this area. Let's show you. Price came to this area twice, right? Once, twice. Price comes down. Okay, cool. We just had the neckline break. Okay, let's draw. So the neckline break right here. Let's go into the 1 hour where we look for entries, or the 15 minutes. Doesn't have to be anything too crazy. 15 minutes is nice. The 1 hour is also nice. Doesn't really matter. And so we had the double top, the neckline, which is actually here. Price, then can actually draw an area. Price then comes right, enters here. Nice bearish engulfing candlestick with an inverted hammer, right? So not the best entry setup, but we could still enter. Now, stop loss will be above these highs. Why? Because we've come down all the way down here, right? We're still on the 1 hour, targeting, obviously, the lows, which will be all the way down here. And you can see price then takes. And even if I did do the key level, price still takes profit. So it's like, guys, this is just based on like the past few weeks. So this is not even like I'm going through years away. Like this is literally, the past week. This is like October 2024. This is literally a start of October. And so like this trade here would have ended literally in end of October. And we could, continue looking for setups. You can continue to find, double tops, right? Another double top right here, right? Price comes down, and then look, like I can literally show you guys another one. Okay, another one, right? Right here, where price creates a double top, right? We wait for price to break its neckline. So we see that price has broken the neckline. Remember, the body has to break the neckline. And so we're looking within this area. So I'm just going to scale in. And so then we look for an entry, right? So we look for an entry. So we see the break. So the break of neckline actually happens with this candlestick, right? So we see the break, and then you can actually see we kind of have this this evening star getting formed. And so we would enter with a short position after this evening star, where it is a bearish Marubozu as well. Stop loss above these highs right here, above these highs, so that we don't get stopped out. And then we target the next key level. So in this case, the next key level from the neckline, so we're at 1.05 So we go for 1.05 or 1.04500, right? So let's actually draw that. So 1.05. So this is like TP1, and then TP2 for 500, right? And you can see like even right here, this is smashed, right? This is a smash take profit. And so this, and you can also see like we kind of did have a bit of drawdown. We did kind of have a little bit of price almost tapping into our entry, but then it went right into profit. And this is literally a few days, last week, guys. This is literally last week's move. So it's like, I'm showing you live what we trade. This is actually probably one of the trades we actually took, right? And so this is why this this entry strategy is so important, right? Once you follow those protocols of look at the trend, right? We found the trend, we're in a downtrend for Euro USD. We then wait for the entry protocol or the entry model, and then right after that we wait for the candlestick formation or the candlestick pattern. Make sure you wait for that candlestick pattern, because let's say, for example, we entered over here, we would have been in a little bit of drawdown. Even though it's like, even if you're scared to not enter and you did enter early, even if you do, don't worry, because you can keep your stop loss above the highs, which is always the best protocol. And so, but the reason why I always say wait for a candlestick pattern is because it gives you that nice snap entry. It gives you an entry where you're barely in drawdown, and it gives you, really good entry. And so if you are in drawdown, it means you just enter a little bit early, but as long as your stop loss is above the high, the previous high, you're good, right? Because if price did decide to continue to the upside right here, we would just then say, okay, this model here was not respected. And even if it did, plummet down, it's just the entry model says that we need to enter within this zone here. So if if it did reverse and go down here, it's just not our model, and we just move on. Okay, guys? So that's pretty much it. What I want you guys to do is practice this entry model. Okay, so tomorrow we're going to go for another entry model as well, but practice this entry model. Practice it. Make sure you follow the steps that I've given you, and you're going to see yourself making a lot of money, a lot of profit within this strategy right here. Okay, so please practice as much as you can, and hop on the Discord if you haven't already. If you want to hop on lives with me where I show you these kind of trades live and direct, and backtest this entry until you become confident with this entry. The way I've done it, even though this is not like manually backtesting, we still backtested, we still practice to see if the setup is great. And you're not always going to see it hit profit. Those 3 examples that I've shown you, even though they are, right in front of us, and even though three of them did hit profit, sometimes the market isn't that great. So make sure that you do practice this, so you do, see the fake outs, right? So for example, if price did decide to go up, we wouldn't have just entered, because we wouldn't have been faked out, right? And then making sure that don't enter up here, don't enter way too early. Be patient, even though yes, you are missing out on so many pips. Like I think this is around like 50, 100 pips we're missing out on, right? Or 80 pips, right? Even though yes, you are missing 80 pips, you're still collecting another 96 pips, almost 100 pips, based on just this push here, right? So don't worry even if you do miss out on pips, because you want to make sure you have a higher win rate. There's going to be traders out here that will enter over here, and price can easily just continue to go up, and it will not always work for you. I've tried it. It doesn't work all the time when you enter early or you enter over here. Be patient, wait, wait, wait. And I can't stress this enough. Just keep waiting until you see your, candlestick and the retest, right? And that will make you way more profitable. But that's pretty much it with this part one of the entry strategy, guys. I hope you guys, actually understood it, practice it. And yeah, the homework is to practice, back test, and become confident at this. And then tomorrow we're going to go through the part two of it, of head and shoulders. And then after these 2 days, you'll be probably ready to enter the markets. That'd be great, guys. So, you guys are learning very, very fast. It's very, very good. And by tomorrow, guys, you're going to be super confident and pumped to enter the markets. But that's pretty much it for today. And I'm going to see you guys tomorrow. Bye, guys.